presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Hi, folks. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. I usually do 10 o'clock to 11 o'clock, the Tiger Technicians Hour, and my service here is the Opening Call Daily newsletter. So we're looking at the Dow this Tuesday, 24th at 3:07 p.m., up 381 at 49,186. Let me just go through this because maybe you haven't been able to listen to my show at all for a little while. And I actually spoke about this with Tommy the other day. I said the volatility index, having been so high since December the 24th at 13.38. Now, this is a fear gauge. Just make it as simple as possible. That's what it is. It's based on options, on futures, and New York Stock Exchange, a whole blah, blah, blah. Doesn't matter. What it does is, when it gets into the 20s, it's getting very high. And it means that investors are getting very nervous. When it gets into the 21 and 22 area, it means investors are getting very, very, very nervous. And look at this. There's no news. I couldn't say interest rates. I couldn't say war. I couldn't say impeachment. I couldn't say anything, right? Other than tech weakness, AI. I mean, what is that? That's all the time you get this kind of stuff. So this is fear promulgated. Look, right here, I'm looking at something in the Den. It was posted, and it says, big headlines, Trump is growing frustrated with the limits of military options against Iran as advisors warn any strike may not be decisive and could lead to wider conflict per CBS. Wait a minute. CBS? Well, once I see CBS, ABC, or NBC, I say to myself, they must have been fed this news. I'm not going to believe this. Why would I want to believe it? Nothing else that they ever report turns out to be exactly true. It's not that they're lying. This is stuff that they're given. So as far as I'm concerned, that's the stuff that once you jump out of the window, and as I said in my program this morning, hopefully you're just on the first floor, because there's no need for it. Look, when the volatility index gets this high, it means you've got an incredible cushion. Now let me go through and I'll show you the cushion. Look at this, INDU, the Dow, bad news, 800 points down yesterday. Whoosh, it gives back over half of the points today. It's up 380 points at 49,184. If anything, it should have arched over, and today we should have been down 400 points. Then I would have said, you know what? This is getting really serious. But you've got that cushion of the fear factor. Look at the weekly chart. We're in this Chapman wave inside. Look at this up channel. And I call this the inside track repellent zone. Every time it gets into this pink green top little mini up diagonal up channel, it gets repelled. And that's exactly what's happened. And then what happens? The green 9-period moving average saves the day. So what have we got? We got the green. We're sitting right on the green 9-period moving average in the weekly chart. We're not even halfway into the week. Let's see what happens on Friday. Look at this massive leg from 36,061 to the 50,502 on the 10th of Feb. This is the single leg A to the upside in the monthly chart. In the Chapman wave methodology, a buy signal that's upgraded to a buy mode, which this is, says it should go to at least 4 higher peaks. That means it should still go to a peak A, meaning a lower high, then a leg B, then a peak B, then a leg C, then a peak C, and then a leg D. And that can take you at minimum from this moment on 6 months, 5 months. All right? If every other month is up and down, all right. enough with that. Let's go to the S&P. Now, it doesn't mean to say you couldn't have a sharp pullback. I'm just saying right now there's no evidence of that. S&P up 45 at 68.83. Not a great looking chart. Look, there's an arch formation. I just love the symmetry of these arches. Higher highs, slightly higher high. Then it makes a gravitational 0% move right there, and it changes direction and comes down. And the pink 9-period moving average says, yeah, that's kind of serious. But the weekly chart is still peak D in a rectangle formation going sideways. But this is a little different, the QQQ. There is some weakness there. Look at this. A much bigger arch from the 638.60 high of the 28th of Jan. Comes all the way down to the 590s. Trading right now at 607. 9-period moving average is still way under the 14, so it's pink. So there's no upside energy. And look at the weekly chart, a little bit deeper in the arch formation, but still just rolling over. The monthly chart, still leg B, looking good. IWM, the Russell 2000. So I should mention we're still long the Dow for a long time. Got 3 times long position, small left, but we keep adding to it. And here we are at 263.18. Up 269 on the IWM, holding beautifully. Look at this rectangle formation in the weekly chart. It looks like it could turn down a little later on, but so far it's holding very well. We still remain long. Let's go to the gold. I'll go straight to the GDX. The GDX right now, beautiful move to the upside, up 44 cents. Leg C, it should make this rectangle formation a bigger rectangle formation that has. If you want to know about these things, you can go to my site and become a subscriber, and you'll get all my webinars based on the rectangle, on the cup formation, symmetry of the bar, left side, right side, how this works when it goes to higher highs and higher lows. It should go back to the previous high of 113.50, just under, right on, or just above, and then you've got to assess all over again, and that's the GDX doing very nicely, 110.78. Let's go to silver. Silver's trading up off the low this morning. It's only up 13 cents at 86.71. So far, it's a leg B, unless by the end of the day, it can go to 88.86, and today's high is 88.75. It needs that little extra to continue in leg B, but it's done very nice. We continue to hold our gold and silver positions, small positions. But I just missed adding this morning to the silver position that we have. Let's go to Bitcoin. Talking about this forever. Here's the same rectangle that we were looking at on the upside. Just think of it as upside down. It's coming to the downside. And that says 60,005 is really important to hold. And right now it's 64,470. We've been negative Bitcoin since that double top in October of 2025 at 127,750. We're warning everyone. And you could use as a benchmark Robinhood, because they are so, look at this, so tied to Bitcoin, but they are trying to find a little bit of support here. So the next, not this week, but the first week of March, we're going to monitor both Robinhood and Bitcoin closely to see if there is an oversold bounce. What am I missing here? Just TBT shows you the arch formation. Look, there's the arch formation in the weekly chart, going from the 35.5 area to now we're at 32.87, 3.87. So yields are coming down a little bit. So I believe we're going to get some music, and we'll have a break. And then after that, we'll be back, and I'll be interviewed. I'll be interviewed by who? Not Tommy O'Brien, but by me, Basil Chapman. See you in a few minutes. The Dow is up 358.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Folks, we're back. Basil Chapman sitting in for EMA. Let me just put this in. Yeah. So I just wanted to do this. In fact, I'll go to this right now. Why not? I always asked about ATAI. ATAI is, if I can actually see what it is, italically ink. Trading at $4.29, up 31 cents. So it's in leg C. It's making a cup formation. It needs to get into this middle part of this candle right here. That's the candle of the 23rd of December with a high of 472 and a low of 425. It needs to hold preferably for about 90 minutes at 454 or higher. And then that says, very quickly it should go to the top. Now, the 200-period moving average in the weekly chart is right here at $4.20. Let me see what it is. $4.25, and it's trading at $4.29. And that's like a magnet, and it goes over and under, over and under. It needs to push away, and that's why that candle that I was talking about from December the 26th. That's why that candle is so important, because at any point in the next 2 weeks, if it can close any day above that, it's now into that ugly, ugly candle. I'll do a little bit more tomorrow. I just want to show you that this is something that I had looked at a long time ago and then forgot about it. It came up on the screamer list at under $10. So, all right, this is exactly the time when Tommy O'Brien usually interviews me. And remember last week when I was interviewed, what I had said was that the VIX index was, in fact, very high. And it had been high for a while, and was high from the December 24th, that's just before Christmas, and it's been high with higher highs and higher lows all the way through. And there hasn't been a real theme to say, wow, I mean, this is really bad for stocks. So it's just been rotational. There have been some stocks that have been hammered. Some of them have had 50% pullbacks, but that's not the point. The point is that the indices have held very well. And that just says to me that at this particular point, you do have a good cushion for the market, because when so many people have bought insurance thinking that really bad times, and I was mentioning today, every morning, my emails every day, I should say, every night, I get an email saying, end of the world, end of the world. It is not the end of the world. Yes, you can get big pullbacks, but it's not. The monthly charts are looking fantastic. All right, wrap that up. Now, what I also spoke to Tommy about was areas like the XLP took over when the tech stocks start to falter. And this has Walmart, Costco, Select Consumer Staples Fund, Procter & Gamble. Well, we have Procter & Gamble. We've been rotating out of some of the very high-risk areas and into more of the, we call them defense stocks, not defense like Raytheon, but defensive stocks like the Procter & Gamble's, Coca-Cola, etc. And here we are with Procter & Gamble. It's at a nice recovery high. It's given us a pretty good gain. We've taken a little bit off. And I think that's very important. Something else that we did, and this one I feel has a little bit more risk to it, is that we got into telephone, AT&T. It's still early in the move, but at the same time, it looks to me like this is more a leg B, a peak B, and it's not looking like a top. We've consolidated, but it is also part of dividend, part of a rotation through the different sectors. So this says to me this is a little bit more risky. And within that context, we also just the other day, we got into Quinity. This is very interesting because the stop we had yesterday held. I said that if we want it, if it goes to 117.70, an all-time high by 1 penny today, we want to take something off. We want to manage this trade. Why? Because Wednesday, NVIDIA has earnings. On Thursday, Quinity Electronics, spin-off from DuPont, which is involved in semiconductor materials, has its earnings. Everything, yes, is that they should be really good, but we don't want to take any chances. So we've got tight stops, taking some profit, and that's kind of what I'm doing right now for subscribers, just being very careful, very selective, rotating. We do still have our General Motors. I mean, look at this. General Motors screamed up to 87.62, all-time high on the around about the 4th of Feb, and now it's consolidating. Look, the weekly chart is still holding very nicely. Look at it, and that's what I had mentioned to Tommy, that we were going through a deep cyclicals. That's like the caterpillars. Alcoa is, aluminum. To have Alcoa rallying very nicely, it means that the economy must be doing quite well. It just wouldn't do that. So I'm looking at this and I'm saying, well, we're in quite a bit lower down. Do we want to add to it? We might add to it. I'm actually trying to realign the portfolio now because for the next month or two, I think that we're going to see something very interesting, something that we hadn't seen for quite a while, and I want to be there. So that's very important. Now, I did miss there some things that I want to have and I don't get. I missed something beautiful on Friday. I wanted it, spoke about it in my video for my subscribers. Every Friday I do an hour and a half long video. I discuss all the different areas, what we're looking at, what we have, what we want to add to, etc. Well, OIS is Oil States International Inc. I had it on the list right there for a couple of days, and I just never said, press the, click, let's get it. I was waiting because I was dealing with some of the new positions that we had. I wanted to see how they did. Look at this thing go from, some people did get it because I was very positive about it. I did not. I didn't get it for subscribers officially. Look at this. It screamed from the 8s to today's high of 14.45. And I think this is what we're going to be seeing. And this I'm hoping that within the techniques that I have, this is the next few weeks. This is what we're going to try to do. It doesn't have to be so low price in the single digits. Hopefully they are, but they are set for a really nice move, not just a quick move, but a move that really starts to build over a period of weeks. And that's going to be the challenge. And that's why I'm saying, if you're in the wrong area, it feels like, oh my God, this is every day. Some of these things just keep going down. But if you're in the right area, you've got a cushion because money is flowing to what's working. Just keep it as simple as possible. So there's something else I was missing. Let me just quickly look at my the portfolio so that I don't forget anything for this so-called interview with Tommy. So we still have core positions in some things that from much lower down. Mentioned just a moment ago was IREN. This is former Iris Energy Limited, next generation data centers, renewable energy, GPUs. Well, it's screening we're in from way lower down. But then what happens is it screams up and goes to the 664 area. But look at that move down to the 200 period moving average. How important is the 200 period moving average? You tell me. It wasn't near it for ages, and then bam, it hits it exactly right there around about the 6th of February, bounces up, and then look what it just did. It went to peak ABCD in a very small move to the upside to D. I don't like that. I like it to be strong moves to a leg D. So this says it could pull back, but look how the 9-period moving average is starting to improve. The MACD needs to cross positive. So there are positions that we've had that we would like to add to, but we have to have a little patience, and I think that some things are starting to turn around quite well. So within that context, it's important to be able to look at the bigger picture, and that bigger picture says, watch this. This is the semis going to all-time highs recently, and now just digesting at highs, near the highs, is one thing. But where I'm worried a little bit here about this, the financials taking a bit of a breather here together with the SPY in exactly this chart pattern that's matched together. Pink and blue is XLF and SPY. I'll be back with Tom Ord as soon as we return. Basil Chapman sitting in for Tom O'Brien, and I'll see you in a few minutes.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, yes, you're back. Basil Chapman sitting for Tom O'Brien. This is the Tom O'Brien Show, and we are right now. We're going to go to Tim Ward. I had a quick question about the E-mini. Yeah, the 10-minute did make that peak E, and it's pulling back, and the 9-period moving average just crossed negative. Peak D in the 5-minute chart, peak D in the 2-minute chart, and the peak E in the 1-minute chart. And it just says if we slip under 6893, got to be careful because that 200-period moving average of 6890 will be very important to hold. All right, we're going to go to Tim Ward. Tim, how are you?
Good. So let's see what's going on in the market. First thing I want to talk about, but this is my website. This is my email address, so you can catch us on Twitter, now X, but I want to point that out. But let's kind of look at the market we're going to look at the S&Ps first, then we're going to kind of the gold market. This is the equity put call ratio reading, and the bottom window is the 5-day average, and the next window higher is a 10-day average of the equity put call ratio readings. And chart goes back, over a year, or actually about a year, and shows the times when both those 5 and 10-day average of the equity put call ratio reading. So this is a sentiment indicator. This is what this chart says is not everybody, but in general, the public's leaning bearish on a short-term basis, and bearish is bullish. But I mark the times here, and here, and actually currently we're here when those two ratios are in bullish levels. So we're probably in a basing period here for another rally up. How high, don't know. But anyhow, we probably came off of a low here last week, and we're currently in a stage of a rally according to the sentiment indicator. So that's one thing I wanted to point out. Another thing, I'm a big fear in the market's good. The more fear it is, the more powerful that rally will be on the next rally. And the bottom window is a 100-day average of the ARMS index or trend. And the next higher window is a 50-day average. And when those two trends get below 1, basically it's like 0.95 really. It's usually a bearish thing for the market. And I pointed those times out here, here, and even here. So if you're going in, if the market's rallying and you got the 50-day trend and the 100-day trend below 1, preferably 0.95 or lower, you're probably going into some sort of a high. We had that back in October, and we did get a minor pullback. It did pull back some, not a lot. But right now we're at 106 on the 50-day and 102 on the 100-day. So in my opinion, there's enough. There's fear in the market to drive it higher. So you got sentiment bullish according to the equity put call ratio readings, and you got fear in the market according to the 50-day and 100-day average of the trend. So I don't think there's a top here of any consequence. So if you look on the daily chart, actually I noted all in here the times when the trend was 1.2 or higher, or near 1.2 and higher, and it comes in all this region between 675 up to the previous highs of 697. So you got a lot of fear in here, and that's the same thing what the 50-day average of the trend and 100-day average trend says. And here you can kind of see it. And a couple of days ago, this is today's rally here, but a couple of days ago we tested the previous low of last Friday, or actually yesterday we tested. Let's see, today's Tuesday, so this will be Monday. Monday you tested Friday's low and lighter volume, and so now you're rallying. And on this day here, which was last Tuesday, you had a trend close of 1.49 and a downtick reading of 468. And that's a lot of fear in both the ticks and trend on a closing basis. So I'm thinking at minimum, you're going to go back up to the highs here. Are we going to break through the highs? We could. So we'll have to wait and see what happens. But my opinion, the trend's up. The market's kind of hesitating today. If you notice, today's volume is just really dry. Well, President Trump speaks tonight, and I think there's a lot of people waiting for hear what he has to say. But I think the outcome will be a bullish rise up to the previous highs, and we actually may break through those highs. So on a short-term basis here, it looks pretty good. On an intermediate-term basis, it also looks pretty good. So having said that, let's get to the gold market. There's a lot of interest in here. This is GDX daily, and anyhow, the blue area, there's a reason why I do that. The only reason why I do that is, or actually it's kind of a green area, when both the 18-day average of the advanced decline and 18-day average of the up-down volume are above -10. If it is, then that's the reason why it's green. And what I'm kind of watching for is this high right here, which is the January 29th high. That high came in as 113.50. And we had on that high that day, we had 67 million shares, or close to it anyhow. And so if you rally up to that high and you test that high and higher, or lower volume, that kind of be a bearish sign, because to get through the previous highs, you need what you call a sign of strength. And that's a big price move and a big volume move. And it kind of looks like may not quite have the energy to get through that high. Today's volume is minuscule coming in. Well, it did this. We had about 8 million shares, but we need to get up to 6-7 million shares to get through that high. So I don't think we'll quite do that. And this up-down volume thing here is ideally you like to see, as you're touching that high back on January 29th, you like to see the advanced decline indicator, 18-day average, you get up back to the previous high. In other words, you like to see this get up there as this market's testing previous high. And you also like to see the 18-day average, the up-down volume, get back to its previous high. And we may not do that. We haven't tested the high yet, but those two indicators are not really responding. Even if you can see here, we're kind of going up, and both those indicators are more or less kind of going sideways to down a little bit. So we're not seeing any energy pushing up here. So what I'm saying is there's a possibility that high, even though it may be tested, it may stall the market. So that's what I'm kind of seeing what happens. Things can change pretty quickly in the markets, but previous high may be resistance here. So
good. So we've got our first break coming up, and we've got Tim Ward, folks, from Ward Oracle, and he's given us some fabulous news. We were waiting to go to the next slide, so we've got a break coming up. Basil Chapman sitting in for Tommy O'Brien. We'll be right back. The Dow's at 378, S&P's 48, and the GDX is up $1.19 at 111.48. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi, folks. We're back. We're on with Tim Ord. We're looking at Tim Ord from the Ord Oracle. We're looking at the GDX. And Tim, would you like to follow up on which slide?
Yep. We moved to the next one here. This is a GDX. GDXJ, which is the juniors compared to GDX. And when this ratio is rising, that means the juniors are outperforming the seniors, which is GDX, the seniors, and GDXJ is the juniors. And I marked in the green area here, when that ratio is rising, that's juniors are outperforming. And so in uptrends, it seems to work pretty well, even though this came out early, but the small ones started to go up before the big ones there back in 2015. 2020, the COVID crash, off the bottom, the small ones are outperforming the big ones going up. And back in early 2024, you can see this ratio is rising here. So as long as this ratio keeps rising, then the juniors are going to outperform the seniors. And how long will that last, I don't know. But your listener, Tiger listeners, asked, what are the juniors doing? Well, the juniors are outperforming the seniors, and I'm thinking this is going to continue for a while. How long, I don't know. But right now, if you look at the ratio here, kind of draw the line, it looks like about 1.35. What that says is if it was 1, if the ratio was 1, that would mean the juniors and seniors are equally performing each other. As one goes up, the other one going up equally. Right now, the juniors are outperforming the seniors about 35%. So if
that's quite significant, yes. Very good.
So if seniors go up 20%, the juniors would go up 30% approximately. So that's how you figure that out. So right now they're doing pretty good. And always try to here. Let's look at another chart here. There's big interest in silver stocks compared to silver, and this is the ratio of the silver stock, which is SIL, to the ETF of silver, which is SLV. And so I did that ratio, went back far as I could, which is basically, 2010. And anything below 1.25 approximately, gold stock or silver stocks are a good value compared to the price of silver. So that's when you want to buy it. And we had a kind of a bicycle for mid 2023 all the way in 2025, or beginning of 2025. That's this green area right here. And right now we're still not too bad. We're 1.62. Anything below 1.25, we may actually fall back on the next consolidation, saying silver stocks would be a good buy again. When it gets above 0.2, which is this area here, that's usually marked highs. So valuation-wise, silver stocks compared to price of silver, relatively speaking, silver stocks are still cheap compared to price of silver. And I expect that ratio to rise over the years because I think this rally is going to be long-lasting. I think it's the rally that started in actually 2024. It's going to last in 2036. I think there's a 12-year cycle started here. And so far, valuations haven't got out of whack yet, according to silver stocks. So these are still good values. This is why I'm kind of at the end of every one of my podcasts, I guess you might call it, interviewing with the Tiger people here. I was going to put a stock on that I like that gave a certain kind of a buy signal, and this buy signal will be the same buy signal but on different stocks. A lot of stocks, you got to look at momentum and you got to look at volume. Those two combinations kind of dictate how a rally will begin. If you look back in this time frame back here, it's this, you had a big swing up in volume. Well, how I did it was you have to have this is a monthly chart. This is a SK Mining Corporation. It's a gold stock, I think. Could be silver. Anyhow, it's a mining stock. And you got to have a sign of strength, which is basically a big explosion of volume through the mid-Bollinger Band on a monthly time frame. So it has to be a monthly time frame, has to have volume through the mid-Bollinger Band, and the Bollinger Band has to turn up. So back here, and looks like this is probably June of last year, you had a pop through the mid-Bollinger Band. But if you look at it, the volume, mediocre at best. It was nothing significant. So it fell back down. That's what usually happens. And it didn't really do anything. Actually, the volume kind of increased to the downside as it kind of fell through, which is kind of a bearish sign. But right here, this is January. This is probably January because this is February over here. But finally, you had a sign of strength through the mid-Bollinger Band. That's your buy signal. It may consolidate here a little bit. How much, don't know. But I drew a line across the previous highs, and that line should be support. I think that line, this is the Canadian. I don't have a symbol for the American, but this is Canadian. So it's got support probably around the 40 range Canadian, which is probably around 30 cents on American. So anyhow, but you had a sign of strength through the mid-Bollinger Band. You jumped above some previous highs on higher volume, and now those previous highs should act as support. So that's what we're having here. So this is not like a short-term trade. This is a multi-month, if not a multi-year trade. If the last signal you look at, it came in 2020 and it rallied, I guess for the high, it rallied for about 2 years, even though it got choppy up here. It rallied for 2 years before it fell below the mid-Bollinger Band. That would have been your sell signal somewhere in early 2022. And you would have been out of that market until you had a sign of strength back up through the mid-Bollinger Band, which you just got in January. And it could have last 2 years, could have last 2 years, could last 3 years, could last several months. I don't know. But this says you did have a sign of strength off of a sideways market that began in 2024. So I had a 2-year base, sign of strength through the previous highs. You closed above the mid-Bollinger Band. So this all that stuff suggests that a major move to a multi-month, if not a multi-year rally is starting. And because the smart money did buy in January. And so, this is on a buy. So this is how I look at stocks on a bigger time frame. And this is how I start with the monthly charts. Then I work backwards from there. But can you buy it here? Maybe, but you can have a consolidation at any time. But in general, this stock's going to work We'll look at it again maybe 6 months from now and see what happened. But, that's the bicycle.
That's very interesting. I can see what you're looking at, and certainly the longer the base, the higher the space is a potential for this. So it has potential, and thank you very much for giving us that information and the warning that goes with it, because it is volatile and it's only less than $1. But thank you so much, Tim. Always appreciate fabulous information that you give us. Look forward to Thursday.
All right. Talk to you then. Thanks a lot.
Thank you very much, Ryan. Folks, we'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman sitting in for Tommy O'Brien, the Tom O'Brien Show. Just wanted to go through a couple of things, and of course we always appreciate what Tim has to say. It's always very, it's not just intriguing, it's very elucidating and very actionable. Let me just show you a couple of things here. So in the very short term, you've got in the daily charts, you've got the Dow, the S&P, the QQQ, and the IWM kind of digesting gains. Their weekly charts are still good, except the QQQ, that's the NASDAQ, is kind of leaning over a little bit. But what I've been saying is that as for the history of what I've been following over these many decades, is that when the VIX index, short-term trading index, gets too high, and it's not short-term anymore, it's been going since December the 24th to higher highs and higher lows. It's up in the 1948 area right now. That's very high, and that's just a lot of nervousness. That kind of gives you a cushion for the market. Usually it doesn't really tank. It can pull back, but it doesn't tank under these conditions. Let's just get that out the way. Now, I just wanted to follow through what Tim was saying. So using Chapman wave techniques with the market vectors gold miners ETF, I've got a technique that I discuss in webinars that I've given for my subscribers, the rectangle, the narrow and the large, the characteristics of the rectangle formation. The long, narrow one, it can last a lot longer than your patience. But the large one, you can come down sharply and then make higher highs to the previous high. And if it's whatever the peak is on the left, you can go 4 higher peaks to a peak D just under, just above, or just on the previous high. And then you've got to be careful. Well, that says that the GDX should make its way to 113.50. It's at 110.55 in leg C. Could have a little pullback. I'm thinking by next week we could have tagged the 113.50 area, and then you've got to be a little bit careful. A little bit careful just means that at that point there might be a lot of resistance. So with that said, I'll do a lot more, and I had a question a moment ago in the Tiger's Den about, where was it? Oh, I hope I can find it. Right here. I'll just, as we're wrapping up, Wolf, that's Terra Wolf. I'll do that tomorrow morning in my show, Tiger Technicians Hour, doing very nicely. It's a Bitcoin